There is one document, one single piece of paper you can pull up in about 5 minutes that for a large number of people over 65 leads directly to a permanently higher Social Security check. Not a bonus payment, not a one-time refund you spend and forget. A larger deposit hitting your bank account every single month for the rest of your life. And the reason most people never see that extra money is not that they do not qualify for it. It is that no one ever told them this document existed, and more importantly, no one ever showed them the one specific line inside it that tells you whether you are being paid what you actually earned. Because here is what matters most, and it is the part almost nobody stops to explain. Simply pulling up the document is not what raises your check. It is knowing exactly what to look for once you have it open. Walk past the wrong line, and you walk right past money that has belonged to you the entire time. So in this video, I am going to tell you exactly what this document is, where to find it, and the precise thing to look for inside it that can put more money in your pocket every single month going forward. I am also going to walk you through the mistakes that quietly shrink millions of Social Security checks each year, show you who is most likely to have one of those mistakes sitting on their record right now, and explain the straightforward form that fixes it once you find it. Stay with me through to the end, because near the close of this video, I am going to give you several additional strategies to raise your check beyond just correcting an error. And at least one of them applies to nearly every single person watching. This is real money. It is your money, money you worked for. And by the time this video is over, you will know exactly how to go get it. My name is Walter Barron. I am an estate attorney, and for more than 15 years, I have sat across the table from retirees going through their finances line by line. And I will tell you the single most consistent thing I encounter: hardworking, honest people who are being paid less every month than they actually earned because of a number sitting on a government record that no one ever asked them to verify. They gave decades of their life to building that benefit. And a quiet error, sometimes buried 30 years in the past, is silently shaving dollars off every check they receive, and they have absolutely no idea. I am going to make sure that is not you. What this document actually is. Let me start with what we are talking about, because once you understand it, everything else clicks into place. The document is your Social Security statement. It is free. It lives inside an online account called My Social Security, hosted on the official government website at ssa.gov. If you have never created an account there, it takes about 5 minutes to set one up. Once you are logged in, your statement is right there waiting for you. It has always been there, and inside that statement is something that the overwhelming majority of Americans have genuinely never looked at in their entire lives: your complete earnings history. Every single year you ever worked and paid into Social Security, listed out chronologically, going all the way back to your very first job, your teenage years, your early 20s, every decade of your working life. Each year has a dollar figure beside it showing exactly how much income was reported to Social Security on your behalf. Now here is why that earnings history is the foundation of everything, and I want you to really absorb this, because it is what makes all of this matter. Most people assume Social Security bases your benefit on your final few years of work, or that it takes some simple average of your total lifetime income. That is not how the calculation works. What Social Security actually does is identify your 35 single highest earning years. It adjusts each of those years upward to account for inflation. It averages them together into one number. Then it runs that average through a benefit formula to produce your monthly check. That 35-year average is everything. It is the single most important number in your entire Social Security calculation. Your whole benefit is built on it, top to bottom. Let me make that concrete. Imagine one of those 35 years, a year when you worked full-time, put in long hours, and earned solid money, is sitting on your official record as a zero, or as half of what you were actually paid. That artificially low number gets averaged in right alongside all the others and pulls your entire average down. And since your monthly check is calculated directly from that average, that one incorrect year quietly reduces every single payment you will ever receive for the rest of your life. Think of it like one wrong grade dragging down a lifetime GPA, except this average is what you live on in retirement. That is why people who find and correct even a single bad year often see a meaningful jump in their benefit. They are not receiving a bonus. They are finally receiving the check they were always supposed to get. And the only place on earth where you can see the raw year-by-year data behind that average, the actual figures going back through your entire working life, is inside that statement. Your check is calculated from those numbers, but you never get to see those numbers unless you open this document and look. The most important financial number of your retirement is built from data you were never shown and never asked to confirm. That is the situation millions of Americans are in right now. Why simply looking at it can lead to a bigger check? So why does looking at this document lead to a higher benefit for so many people? Here is exactly why. Every number in your earnings history came from payroll reports that your employers submitted over your entire working life. Decades of reports from every job you ever held. Small companies, large corporations, seasonal work, side jobs. And sometimes, more often than most people realize, those reports contained errors. A year where your employer entered the wrong figure. A year where the amount on record is dramatically lower than what you were actually paid. A year showing up as a complete zero when you worked that entire 12 months without missing a beat. Every single one of those mistakes lowers your 35-year average. And a lower average means a smaller monthly check, one that you are living on right now. And here is a number from the Social Security Administration's own data that I want you to sit with for a moment. A single year of missing or incorrectly recorded earnings can reduce your monthly benefit by roughly $100. One wrong year, $100 a month. That is $1,200 a year, quietly drained out of your retirement income. Stretched across a 20-year retirement, that one mistake on one line costs you approximately $24,000. And if there are 2 or 3 incorrect years on your record, which is not uncommon, you can multiply that figure right out. Now here is the part that ought to make you angry enough to act. The Social Security Administration does not audit these for you. There is no automatic review process, no alert system, no letter that arrives in your mailbox saying, "We have reason to believe your earnings record may contain an error." The data gets submitted, your check gets calculated from it, and unless you personally open that statement, read through it carefully, and compare it against what you actually remember earning, that mistake will sit there undisturbed for years, shrinking your check the entire time. The money does not come looking for you. You have to go find it yourself. Who is most likely to have an error on their record? Right now. You might be asking yourself at this point, am I actually someone who could have money sitting there unclaimed? Let me tell you exactly who is most at risk, because if you recognize yourself in this list, you should be pulling up that statement this week. First, anyone who worked for a small business, especially during the 1980s and 1990s. Back then, a lot of payroll was processed by hand. A business owner with a paper ledger, handwritten records, and no automated verification system. Honest mistakes were far more common in that environment than they are today. If you spent a significant portion of your career working for a local shop, a family-owned company, a small operation of any kind, your record is exactly the type that tends to contain errors. Second, anyone who was ever self-employed. Freelancers, independent contractors, small business owners, anyone who paid self-employment tax and reported their own income. The way those earnings get submitted to Social Security leaves considerably more room for a year to be recorded at the wrong amount, or to go missing from your record entirely. If you worked for yourself at any point, even for a stretch of a few years, look at those years particularly closely. Third, anyone who changed jobs frequently. Every single time you started with a new employer, there was another opportunity for someone in a payroll department to miskey your information, your earnings, your name, or your Social Security number, and inadvertently send that income credit somewhere else. The more employers you had over the course of your working life, the more opportunities there were for something to go sideways. Fourth, And this one is enormous, and it is missed constantly. Women who changed their last name after a marriage or a divorce, and whose name was never updated correctly in Social Security's system. Here is what happens. When an employer submits payroll records and the name they use does not match the name on file at Social Security, those earnings can fail to attach to your record at all. They float somewhere inside the system, credited to no one. Years of real work, real paychecks, real money you earned, simply not counted toward your benefit. If you have changed your name at any point in your life, this is one of the most important checks you will ever run. We will come back to this. The hidden opportunity inside your 0 years. There is one more thing inside that statement that tends to surprise people, and it can be worth a substantial amount of money. If your record shows fewer than 35 years of earnings, which applies to many people who stepped away from paid work to raise children, care for a parent, go back to school, or who held jobs that were not covered by Social Security, the system fills in the gap. To reach that 35-year calculation, it inserts a 0 for every missing year, and those zeros flow directly into your average, dragging your benefit down hard. But here is where the opportunity lives. Sometimes those years are not actually empty. Sometimes you really were working during that period, and the earnings simply were not reported or recorded correctly. Finding even one real year of work sitting on your record as a 0 and getting it corrected can add anywhere from $50 to $150 a month to your check. Find 2 or 3 such years, and you are looking at a meaningful, permanent raise for the rest of your life. 2 real stories that show what is at stake. Let me put a face on this because numbers on their own do not always hit home the way a real story does. I will tell you about a man I will call Raymond. Raymond spent 3 solid years in the late 1990s working for a small construction company. Hard physical work, long weeks, good pay. Decades went by. Then, just before he was about to retire, someone finally told him to pull up his Social Security statement and actually read through it. He did. And sitting there in the earnings history, those 3 construction years were recorded at roughly 60% of what he had actually been paid. The company owner had been processing payroll by hand, submitted the wrong figures, and Raymond had never known. He gathered what old records he still had, filed a correction with Social Security, and his monthly check went up by more than $300 every month for the rest of his life. That money had been sitting there unclaimed for nearly 30 years. The only thing that unlocked it was Raymond spending one afternoon looking at one document and reading one section carefully. Same man, same career, same lifetime of work. The only variable was that on one particular afternoon, he finally looked. Now let me tell you about someone whose situation I worry about even more, because I believe it is far more common than most people realize. I will call her Margaret. She got married young, took her husband's last name, and worked for nearly 15 years under that name. Later in life, she divorced, changed her name, and kept working. She never gave the name issue a second thought. It seemed like purely a personal matter, nothing to do with her finances. Then, decades later, when she finally pulled her Social Security statement, she noticed something troubling. A stretch of years in the middle of her career where the earnings were far lower than she remembered, and a couple of years that were nearly blank entirely. What had happened was simple and heartbreaking. During the name changes, some of her earnings had been submitted under a name that no longer matched the name on file with Social Security. And that income never attached to her record. It had been floating in the system for over 20 years, credited to no one, quietly pulling her benefit down the entire time. When she gathered her old tax returns and presented them as documentation, her benefit was corrected and went up meaningfully, permanently. If you are a woman who has changed your name even once, I am speaking directly to you right now. This is not a hypothetical risk. Go check your record. You may be owed more than anyone else watching this video. More ways to raise your check, beyond just fixing an error. Now, correcting a mistake on your earnings record is the highest impact move for a lot of people. But I promised you more than that, because not everyone has an error on their record, and there are other legitimate paths to a higher check that most people never explore. The first one ties directly back to those zeros I mentioned. If your record still contains 0 years within your top 35, you can replace them. Every additional year you work, even part-time, even later in life, has the potential to knock out one of those zeros and replace it with a real number. Since the formula uses your 35 highest earning years, one more solid year of work can push a 0 or a tiny early career figure completely out of the calculation and raise your average. For some people, one additional year of work quietly adds more to their monthly check than almost any other financial decision they could make. The second is about timing, and your statement shows you the exact numbers. If you have not yet started collecting your benefit, every year you delay past your full retirement age increases your monthly check by roughly 8%, guaranteed all the way until age 70. That is a rate of return you cannot find anywhere else in a low-risk financial product. Your statement lays out projected benefit estimates at different claiming ages so you can see exactly what waiting is worth to you specifically. The third involves family benefits that an enormous number of people simply never claim. If you are married, divorced after a long marriage, or widowed, there may be a substantially higher benefit available to you than the one you are currently collecting on your own record. A spouse may be entitled to claim up to half of the higher earner's benefit. A surviving widow or widower receives the larger of the two checks. People leave staggering amounts of money on the table here, not because they do not qualify, but because they assumed the check they were already receiving was the only one available to them. It is always worth confirming. Every single one of those strategies is a legitimate path to a bigger monthly check, and every one of them starts the same way, by opening that statement and understanding what it is actually telling you. Exactly what to do. Step by step. Here is the complete process. Write this down, bookmark this video, or watch it a second time. But before you even log in anywhere, take a few minutes to gather whatever records you have from your working years. Old W-2 forms, old tax returns, old pay stubs, even a handwritten list of which jobs you held in which years and what you generally earned. Pull everything into one folder before you sit down. The more documentation you have, the stronger your position if a correction becomes necessary. And if there is a box of old financial paperwork sitting in a closet somewhere that you have been meaning to sort through or throw away, do not throw it away yet. That box could be worth thousands of dollars. Step 1. Go to ssa.gov and create your My Social Security account if you do not already have one. It is completely free. It is the official government website. The process takes approximately 5 minutes. And be careful, only use the real ssa.gov. If you see an advertisement or a link from a third party offering to pull your records for you, skip it. Go directly to the source. Step 2. Once you are logged in, open your statement and navigate to the earnings history section. You will see a year-by-year list going all the way back to your first job, with a dollar figure next to each year. Step 3. And this is the step that actually moves the needle. Compare those figures year by year against your own records. Your W-2s, your old tax returns, your pay stubs. You are looking for 3 specific things: years where the number recorded is clearly lower than what you actually earned, years showing a 0 when you know for a fact you were working, and years that seem to be missing from the list entirely. Take your time. Pay the closest attention to your highest earning years, because those are the ones that go into your 35-year average. An error in a high-income year does far more damage to your check than an error in a low one. Step 4. If you find a discrepancy, the document you need is called a Request for Correction of Earnings Record, and it comes directly from Social Security. You submit it alongside whatever documentation proves what you actually earned. Your best evidence is always original W-2 forms. But here is something most people never know. Even if you discarded your old paperwork years ago, Social Security can pull copies of your W-2 records going back to 1978 for free, when the purpose is correcting your earnings record. A missing shoebox of old tax documents is not a reason to leave this money behind. Step 5. Be patient, but stay persistent. Social Security typically processes correction requests somewhere between 10 and 90 days. Once the correction goes through, your benefit is recalculated, and the higher amount starts appearing in your monthly check going forward. There is a 3-year window for correcting recent errors without additional complexity. But do not let that discourage you from pursuing older ones. Mistakes from 10, 20, even 30 years ago can still be corrected with the right documentation. Never assume that because something happened long ago, it is too late to address. If you have the proof, it is worth filing the correction. If computers feel overwhelming, you still have options. I know that some of you are listening to all of this and thinking, Walter, I am not comfortable with computers. I would not know how to set up an online account, and I do not want to make a mistake. I hear you completely, and I do not want that discomfort to be the thing that costs you thousands of dollars. So here is what I want you to know. You do not have to do any of this online. You do not have to do it alone. You can call Social Security directly at their national helpline, 1-800-772-1213, and ask them to mail you a printed copy of your earnings statement and walk you through the review process over the phone. You can also walk into your local Social Security office in person and sit down with a real person who can pull up your record right there with you. And if you have a son, a daughter, a grandchild, or a trusted friend who is comfortable navigating websites, this is a perfect afternoon project to do together. Sit side by side, log in, and go through the earnings history together. There is no shame whatsoever in asking for help. The only real mistake is letting the money stay unclaimed because the process felt intimidating from the outside. Your benefit belongs to you, whether you access it online or in person. There is always a path to get there. One serious warning before you start. And before you take a single step, I want to give you a warning, because anytime there is money owed to seniors, someone appears who wants to take a cut of it. You do not have to pay anyone to do this. Not a service fee, not a percentage of what you recover, nothing. Checking your statement and submitting a correction is completely free, and you do it directly through Social Security. If you ever encounter an advertisement, a mailer, or a phone call from a company offering to recover your missing Social Security earnings in exchange for a portion of the benefit, hang up. What they are offering to do is take the exact same free steps I just walked you through and keep part of your money as payment. The only resource you need is the real ssa.gov, the help of a trusted family member, or a legitimate fee-only financial advisor who does not earn commissions. Bringing it all together, I realize this is a lot of information to hold at once. The statement, the earnings history, the 35-year average, the correction form, the additional strategies for raising your benefit. So let me land on what actually matters. Your Social Security check is built on decades of earnings data. If even a single year of that data is wrong, your check is smaller than it should be, and it will stay that way month after month, year after year, until you find it and fix it. No one is going to find it for you. But the document that lets you check it is free, it is sitting in your account right now, and it is about 5 minutes away. Most people spend more time scrutinizing a grocery receipt than the one document that determines their income for the rest of their lives. That is the honest truth. This is worth one afternoon. This is worth one phone call. This is worth asking someone you trust to sit down with you. So here is what I am asking you to do today. Not someday, not next month, today. Go to ssa.gov. Open your statement. Read through your earnings history, line by line, year by year. And if anything does not match what you know you actually earned, file the correction. That is the whole thing. That is how a free 5-minute document becomes a bigger check for the rest of your life. The Senior Money Playbook. So many of you have reached out asking me to pull all of this together in one organized place. The statement process, the correction steps, the spousal and survivor strategies, the Medicare programs, the property tax breaks, and everything else I cover on this channel. All written out in plain English with the exact steps and the exact forms so you can work through it at your own pace without hunting through multiple videos. So I put it all together. It is called the Senior Money Playbook. It is a straightforward guide written specifically for people over 65, readable on any phone, tablet, or computer, or printable if you prefer to have it in hand. Every benefit comes with the precise steps to actually claim it. The link is in the description below. If anything on this channel has ever helped you hold on to money that was rightfully yours, that guide will help you find considerably more. And if this video opened your eyes to something you did not know before, please do one thing for me. Share it with someone you care about who is on Social Security or approaching retirement, especially anyone who is ever self-employed, worked for a small business, or changed their name at any point in their life. Those are the people most likely to have money sitting unclaimed on their record right now, and they are the least likely to know it. The government is not going to make that call, but you can. Subscribe and turn on the notification bell so the next one reaches you when it goes up. End of script.